Hello, everyone. How are you doing today? My name is Ryan McCrary. I'm the CEO and founder of McCrary Financial Solutions, where we provide financial solutions through financial literacy, digital marketing, and entrepreneurship. Do me a favor right now. If you watch this on replay, type replay down in the comments, type your name, where you're from, and if you have a business, put the name of your business. Again, if you're watching this on replay, type replay down in the comments, type your name, where you're from, and the name of your business. So today I just want to talk about 5 tips for investing in the stock market. Literally daily, I get messages, emails when I'm on the street, when people see what I'm doing, people that purchase my book, they ask me, how do I invest in the stock market? What can you teach me about the stock market? How can I invest? How can I invest for my child? Just a few weeks ago, I seen somebody that I knew from high school in the store, and she was like, I love what you're doing, but I want you to teach me how to invest. How can I invest for my children? How can I leave a legacy? How can I start making smarter decisions with my money? So I said, first thing, of course, buy my book. If you haven't bought my book, buy that. I have courses. You can book a consultation. It's not going to be free. The consultation price is increasing as time goes on, as my expertise elevates. But I thought I'd just drop some quick tips for y'all. My ride or die tribe. I know y'all, most of y'all already know how to invest. Most of you guys already have stocks. Most of you guys are, investing on a regular basis, finding new IPOs, stuff like that. But for all the people that still are apprehensive, still need a little more guidance, and still need a little more tips, my job here is to, give you some tips, some knowledge, some jewels, just from my experiences working in the industry, working with finances, and now, teaching online and offline. So the first tip I want to teach you about is mutual funds. The first tip, so it's just 5 tips for investing in the stock market. Tip number 1 is look into mutual funds. Little disclaimer before we go further. I am not licensed anymore. I have my securities licenses in previous years, but I am not currently licensed. I don't work at that company anymore. So legally, I cannot tell you what to pick. I cannot tell you, what you should invest in, give you quotes, and give specific recommendations on this, saying, buy this because you're going to make $10,000 next quarter. I cannot legally tell you what to pick. So these are just general tips that I'm giving you based off my expertise. So tip number 1 is look into mutual funds. A mutual fund is an investment that has multiple different investments in one fund. So you could have multiple different stocks or bonds or other different securities. So instead of saying, because one of the things people say is, I don't know what to pick. I want to invest, but where should I start? What should I buy? Should I buy this? Should I buy that? But when you purchase a mutual fund, you are in a fund that has multiple different stocks in that fund. So you may get into a mutual fund that has Apple and Exxon and Walmart and Disney and whatever, Coca-Cola, all into that one security. So you don't have to worry about trying to pick the right one. You don't have to be worried about how do I pick this or that, or trying to, time the market, stuff like that. I strongly suggest you do not try to time the market. So that's tip number 1, is just look into mutual funds, because mutual funds give you instant diversification. Why is diversification important? Diversification is important because you never put all your eggs in one basket. You never put all your money on one horse. So when you're diversified and you're in multiple different stocks, if one company does bad, one company does good, whatever the case may be, you are in multiple different securities. So you are risk adverse as opposed to putting, $100,000 into one stock. Another tip with this, I just want to mention is a lot of people, they watch CNBC, they watch Jim Cramer, they watch all the analysts, and they think, well, so-and-so said this is going to go up next quarter. So-and-so said Netflix is going to do well. So-and-so said Disney's doing original content, so they're going to get more market share. Nobody knows. I don't care what analyst you see. I don't care what person you talk to, unless they know specifically that they have insider trading information, which is illegal, but maybe getting some tips from a company that are not public record, so they can go to jail for that. So no one knows how it will perform. When I watch those shows, and I do watch CNBC, I watch the analysts, I watch Market Watch and all that stuff. When I watch it, to me, it's like ESPN. It's like watching Around the Horn or Stephen A. Smith or Skip versus Shannon Undisputed. That's what it's like working for me. Or that's what it's like watching for me, because they're speaking on opinions. They're speaking on opinions. No one specifically knows how a stock will perform in the future. So this goes back to a principle that was written in the 1970s in a book called A Random Walk Down Wall Street. It's called A Random Walk Down Wall Street. Burton Malkiel, he wrote a book about monkeys. They got the best analysts on Wall Street, and they got monkeys in a room. The best analysts on Wall Street say, pick IBM, pick Coca-Cola, pick Disney, pick, whatever other Procter and Gamble, whatever other stocks were out back in the 70s. They all, said these are the stocks going to do best next year or next quarter, whatever the case may be. And then they got monkeys in a room, and monkeys literally threw darts at a wall. Wherever the dart would land is the stock they would pick. And once they did the research and the results, they seen that the monkeys won more than half the time by just randomly throwing darts at a wall, picking a stock. So what that means is no one can specifically tell you how a stock will perform. You can randomly throw darts at your wall and say, Apple or Target or Walmart or Amazon, if you can afford it. And then pick those, make sure diversified. And then you can put that up with Jim Cramer or whoever else is on CNBC or Fox Business, and you'll probably be pretty even. You may even have better stock picks than a quote unquote analyst because no one knows how it will perform. No one knows. So that's tip number one. Tip number two is start small. Now with the mutual fund, generally it's an investment of maybe $1,000 up to $3,000 initial investment, which may not be in your budget, which is okay. So what you want to do is start small. Start small. You can start with a $50 share of stock. You can start with a $5 investment in the account called Acorns or Stash or Betterment or Robinhood. You can start very small. That's another misconception with the stock market. People think you need a lot of money to invest. That is one of the biggest myths. That is one of the biggest misconceptions that holds people back because they automatically think, I don't have enough money to invest. I don't have enough money to buy a stock. I don't have enough money to buy a mutual fund. I don't have enough money to do this, that. But that is a misconception. That is not true. So now that you know you don't have to be an analyst and worry about which stock you have to pick, you don't have to have boats of money, you don't have to be balling to invest. Now that you know that, the third tip is to reinvest your dividends. Again, I'm not telling you specifically what to do. I am not giving specific advice or recommendations. I'm giving a suggestion on what I do and what may be a better decision that you may want to look into. So reinvest dividends. So when you sign up for an account, a brokerage account, or whatever type of account, even Acorns, I believe they ask you this, they're going to ask you, what do you want to do with your dividends and capital gains? What is a dividend? A dividend is money that is paid out to you for being an investor. It may be monthly, it may be quarterly, it may be annually, it may be semi-annually, depending on the stock, or you may have a stock where you don't even get any dividends. But me personally, most of the stocks that have paid dividends, I really like getting a check for just being an investor. That's what they call passive income. I like getting, money. I don't even get a check because I reinvest it, but I like getting money paid out to me. I like getting income for not doing any work. I don't work at Apple, but I get a dividend for being an investor in Apple. I don't work for Walmart, but I may get a dividend for being an investor in the company. So what you want to do with those is you want to reinvest those dividends. If you don't want to reinvest, they may just send you a paper check. They may do a direct deposit. And then you want to be careful also if it's a retirement account, because that may be seen as a distribution. So if you're under 59 and a half, if you're not of age to retire, that could have a tax liability. So you may want to look into it. So that's why I say it's easier just to reinvest it. So instead of having the money at $30, $40, $50, $100, $200 paid out to you in a dividend that you go to your bank account, you can have that to buy more shares of that investment. So that's just going to grow it more. It's going to build your portfolio more. Tip number 4 is you want to, this is, basically how to do it. Because people say, all right, I know what I want to pick. I want to invest in Netflix. I Netflix and chill. Now I want to be an investor. I want to get dividends. I want to have voting rights, but I don't know how to do it. So tip number 4 is you need to open a brokerage account. A brokerage account could be through Vanguard, could be through TD Ameritrade, could be through T. Rowe Price, could be through Schwab, could be through E-Trade or Scottrade. I can name 100 different ones. Just pick one and start doing it. So you need to open a brokerage account. Generally, it's only $50 to $100 minimum to open an account. You go on, so you say, okay, how do I do that? You go to tdameritrade.com and you go to open an account. I'm going to go there right now, actually. So you would go to tdameritrade.com and you would go to open new account. And it's very, very simple. Very, very simple. But a lot of people, it's really a mind game. This is exactly why my book is called Mind Over Money. It's kind of bright in here, so you might not be able to see it. But this is why, and what's the first thing it says? It's easy. Open an account in 5 simple steps. But 100% of the people that are watching this video are not going to do it. So please be in the, I don't know what percentage you're going to be, maybe 10%, maybe 50, maybe 99. But I know 100% of the people that need to do this will not do it. So be in one of the percentage of the people that does it. But like I said, this is why my book is called Mind Over Money, because it's mindset. People say, I can't do it. It's too hard. I don't know what to do. I don't know what to pay. Blah, 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 blah. Years go by and you still don't invest. Your children start up in the same place that you did and I did. And you can't blame anybody but yourself, because now you have the information. Before the internet, before certain things nowadays, okay, we weren't exposed to this information. We couldn't Google on our smartphone and get information at the drop of a hat. But now you can. So now there is no excuse. Like I said, you go to TD. This is just an example. You don't have to go here, but you will go to tdameritrade.com or somewhere else and go to open an account. And it's very, very easy. Number 5 is the hardest one. Just kidding. Just start. The number 5 reason is just get started. Just get started. Don't worry about trying to be an expert. Don't worry about trying to pick the right and time the market. Just get started. So get started today. If you have more information, you can email me at customerservice@mccraryfinancialsolutions.com. That's customerservice@mccraryfinancialsolutions.com. And I'm going to give you actually 2 more bonus tips for investing in the stock market. Bonus tip number 1 is do it consistently. So don't just put $100 or $1,000 in today and leave it alone and never touch it again. You want to be investing consistently. So every time you get paid, or once a month, whatever the case may be, even if it's $20, even if it's only $100, make sure you do it consistently. So that is called compound interest. That's compound interest when you put money in consistently and it grows over time, as opposed to you just putting it in one time and it's going to still grow with the market. But putting it in, an amount on a consistent basis gives you compound interest, and it will set a big difference. It will make a big difference on your portfolio. It will make a bigger difference in your life. So bonus tip number 2 is don't be afraid to open multiple accounts. So people think, I want to open a stock account. Well, you may want to open a stock portfolio or a stock investment or a mutual fund or just buy Amazon. But you could own Amazon stock in multiple different accounts. I'll repeat that again. You can own a stock or a mutual fund or any other type of security in multiple different accounts. What I mean by that is you can have an individual taxable account. You can have a retirement account, multiple different retirement accounts, traditional IRA, Roth IRA, if you're a business owner, a SEP or a simple IRA. You can have a joint account with your spouse or someone else. You can have a trust account. You can have a 529 college plan and still have a mutual fund or a different security. So there are multiple different accounts. So that's why me being exposed in the industry, I've seen so many different accounts, so much money, so many investors, so much stuff. I'm like, there are so many different investments and so many different accounts you can invest in. And the only thing holding you back is yourself. So do that. Again, if you need any questions, you can email customerservice@mccraryfinancialsolutions.com. That's customerservice@mccraryfinancialsolutions.com. If you have not got my book, I don't know what you are doing. I don't know what drugs you are using. I don't know where you've been, how they're under rock. But you can still get a free copy. Go to mindovermoneybook.com. That's mindovermoneybook.com.